All right. So, as the title says, hope is not a strategy. So do this instead. What do you think it is I'm going to tell you to do? What do you think it is? Hope is not a strategy, which means what? In my humble opinion, there needs to be, you need to know what you're doing at every stage of a trade, meaning beforehand, okay? You're going to know where you're going to enter, most likely when you're going to enter as well, okay? But that means entry, stop loss, and TP. Either take partials or take profit altogether, like if you trade one contract. Okay, all in or all out. I would also say you need to know when you're going to move your stop, why you're going to move your stop, and where you're going to move your stop to. Always in the direction of your trade, not against. Okay? That's the way that I do it, at least. So, what is the strategy that I use? Well, I wouldn't say it's one particular strategy because there are multiple models. That's why I taught the Market Maker Models Masterclass, because there's there's a plethora of options on how to enter a market, just like stops. We went over that yesterday. There's so many places that you can put your stop. So I would say if I had to, tell you like, oh, what my strategy is, I would say I want to trade in the direction of resting liquidity. Ideally, I want to trade in the direction of opposing liquidity. So what that means, and this is, again, just like the market maker model, for example, if you look at this chart, okay, first thing I saw this morning, you wake up, I haven't even opened my energy drink yet, and it's like, where are we at? And we're down here. Okay, this was just after the open, down in here, right? When I got to the charts, at least. Okay, so my eyes immediately, they go right to up here. Because why? These are equal highs. Okay, right up here. And I checked already. The high is 5869.5. The high here, 5869.5. But well, both of those on this 5-minute time frame. So right here, those are identical. So immediately off the rip, that's my upside target at a minimum. And I'll get to that in a moment. Why that's a minimum target. Because I'll just tell you now. Because if you remember yesterday, we had some clean highs up here. And I'll show you the markups in just a minute. Right? I gave you this yesterday on the live stream, not just the equal lows, which was later tagged, by the way. If you followed up on that, you're welcome. But I talked about these highs up here. And also, what also did I tell you in that live stream? I told you it would make more sense if we traded down and into the Sunday's gap before going up here. Well, what do you think we did today? What do you think we did today? Overnight, well, actually, Asia, we ran into it higher in London, stopped, equal highs. Then this morning came down and into what? That weekend gap. See that? Weekend gap. So that is from Friday, right? Friday's close, Sunday's open. And I gave you that. I said I don't remember the exact verbiage, but I said we're probably going to trade down here before going up here. That's what I wanted to see. Something like that. Okay. So yeah, look at that. Look at that. Go watch the live stream yesterday. Like real talk. Go watch the live stream. So what did we do today? Well, thank God we left behind equal highs, because if we didn't, then this probably wouldn't have worked out in the way that I wanted to. But what is the plan here? Well, the plan was go to Sunday's gap and then rally for, well, these equal highs weren't created yet, but it was the higher target up here. which is why in the Discord, I said earlier, I partialed and I would hold, I don't remember if I said for the rest of the day or for higher pricing or something like that. I don't think I included the specific price level, but I did give it to you yesterday. So that is what I would have ultimately wanted to hold for. Okay. So that's pretty interesting, isn't it? Is it not? Did you write down those levels I gave you yesterday at the end of the live stream? I gave you the equal lows, and then I gave you NASDAQ too, which we'll look at in a minute. But both of those were tagged today. So the plan, right, going into today, what is the plan? Because hope is not a strategy, right? Well, the plan is go to Sunday's gap, rally up for the high. But we need some justification. We need some time, price, and context. And of course, you know, liquidity, right? So here we have our original consolidation just above the weekend gap. Okay. Either weekend gap, Sunday gap, it's the same thing. Okay. Original consolidation here. We have I know the camera's kind of big now. We have this low right here. Okay. So that bottom half, right, of the weekend gap, that bottom half has not been traded to until pre-market, and then our equities open. That's also going to be important too. Okay. So our equities, if we're going to go higher, what does the market typically do first? Before it goes higher, it's going to go lower. Typically. Okay. 99 times out of 100, it'll do that. So we trade down and into what? We end up trading into the low end of that weekend gap. So we have equal highs. We dropped down at our equities open, and we've, you know, filled in this gap, right? So then what should be next? Expansion to the upside. So what is coming back to the strategy or the plan? Again, if I can say this for the third time, the plan was, as of yesterday, before all this, trade into the Sunday's gap, rally for the high. So just because we trade outside of the parameters of the gap, that doesn't mean that I'm wrong, or that doesn't mean that you're wrong. Okay. So we could long into something like that. I don't. But what I will do is wait for what? A retracement. Because this here ends up being what? Well, if we have original consolidation, what does that make this? We have a low here. It's not a straight line, but it doesn't really have to be. So this ends up being manipulation. Okay? That, I mean, if the market's bullish and it goes lower, to me, that's manipulation. Now, this is also accumulation against Dow. I'll let you look at your own chart for that. Today is October 29th. It's also my dad's birthday, too, which is cool. I just noticed that. So it's October 29th, 2024. All right. Today is Tuesday. So if you're watching this in way beyond today, then you can go back and look at it. But this was a signature of accumulation against Dow. We have a lower low. So this, again, to me is manipulation. We rally off of it. So this to me would be the low risk buy. Okay. That's one of the first retracements after manipulation. Low risk buy. Then we trade higher, and I'll zoom in on this so that way you guys can see it. Super zoom in here, just like the camera. Okay. So what is this here? That's an imbalance created on the way lower at our equities open on a 5-minute time frame. So we trade into it, the high end of it, and we reject. But it only rejects to go down and into the low risk buy. Okay. Then we trade through. There's that 850 candle. You see where it closes right there, where my mouse is pointing to? that up candle at 850 closes outside above the parameters of this imbalance. So this is not bearish, especially once that candle closes. So what can we do? You could long the next candle. You could do that. Or you could wait for what? For when price trades down and into the inverted imbalance. So that could be a long as part of what? The first stage. Why would that be first stage? Because remember, there's an order. The order of models. Remember that? Remember this? And I know my camera now is cutting this bottom part off here, but it says higher time frame concept. Okay. Is a weekend gap a higher time frame concept? Seeking liquidity. This, right? So it's right after manipulation. It's right after higher time frame concept. In here, that's where you're going to find your low risk longs and your first leg of accumulation. So what's after that? Second leg, which that should be our run to liquidity above equal highs or low resistant highs and consolidation. So this image in here is our framework, also known as a market maker buy model. So again, it's not always going to be picture perfect, but if that's our manipulation, there's our low risk buy. So what does that make this in here? In here is our first leg accumulation. Then we should see a run higher. Did we get a run higher? Yes, we do. Did we get that higher time frame target from yesterday? Yes, we did. That's why you heard that jingle at the beginning of the stream, because that to me was the ultimate target for today. So I don't know what we're going to do now. We might come back for internal range liquidity, but let's investigate down here a little bit more. Yeah, you can see that. It's good enough. This is our sell side. That means everything in here, right, was our sell side delivery. And this was our buy side of price delivery. Now, in order to prevent, my chart from looking like a traffic light, what we're going to do is just scrunch that up. And that's why it looks like this. So it looks a lot cleaner. So that way we can actually see what's going on instead of having a bunch of colors everywhere. Okay. So our sell side of price delivery, was there anything utilized for short? Let's do that exercise. Okay. The same exercise I told you about months ago. You go all the way, you draw a vertical line at the lowest low, or you can just move your chart all the way over to the right. So that way you only have sell side price delivery here. So you take a look at it. Was there anything utilized to go lower? Well, there's there's a few things. So because these are equal highs, I wouldn't look at this like a mitigation, even though that does react here to go lower. But what I will tell you is this candle here, okay? If you zoom in on that, or if you put those two together, I wouldn't knock you if you did that. That's actually what you're supposed to do. If you put these two up candles together, right, we traded down into the halfway point of the weekend gap, and we rallied into that. There's a small imbalance here too. And if we move that over, okay, we hung around there for a little bit, but nonetheless, that was still utilized to go lower. Okay. So what does this area up here represent and the area down here represent? Why on earth would we have a halfway point? Well, this was in my book too, that came out in 2021. It's in there if you have a copy. You can go look at the institutional candles chapter, and it's in there. And even at the end, I think I put some charts in there and I cut them in half. So they've always been there. But we have, and that's why it's labeled like this, WG premium and WG discount. Now, WG is nothing new. WG is just a short way of saying weekend gap, because I've tried to fit everything on one chart, and it's hard to do when you mark up everything. So you got to cut me a little bit of slack here. But that's all that means. It's nothing new. There's not a new lesson today or anything like that. It's just WG stands for weekend gap. So weekend gap premium, which is the high end, and then weekend gap discount, which is the low end. Okay? So now, actually, we'll leave it here. Now it makes a little bit more sense why this inversion, because it's in the discount of the weekend gap. It's in the lower half of it. See that? At 9 o'clock too. What's 9 o'clock? Not just the macro. You're right. It's not just the macro. Okay, now we're going to get a little bit messy. All right, it's our class today. Mason, it was news. I think it was jobs report or JOLTS or something like that. But that's the macro, which is 8:50 to 9:10. That's also the open of the hour, the 9 o'clock hour, right? Buying below the open of 9 a.m. So that's macro, 9 a.m., buying below the open of the hour. This is also below equities. And it was news right there. So our news was the excuse for volatility. And that's essentially the mask that price is going to wear to end up launching higher, right? Oh, the jobs reports, they launched us higher. No. That was the excuse or the mask, to have that justification for why price should trade higher. So coming back to what was utilized for shorts to go lower, what was once bearish, okay, this is in the Bible, my friend. What you sow, you shall reap. It was also in the Daily Stoic the other day too. One of the titles to one of the last couple of days was that too. Okay. We trade into it. We trade out of it at 9:15. Okay. Pay attention here. We trade outside of it, right? At 9:15. So what does that become? Reaccumulation. Boom. Remember the other day I talked about micro fluctuations in price? Those little movements against the direction. I told you those were going to give you the best entries. You wrote that down, didn't you? What do you think that is right there at 9:20? We trade down. We trade against going higher, don't we? So what does that look like? I don't know. Remember this gem right here? Remember this thing? Open low, long, and trade higher. You're buying below the open of that candle. Right there. I got in a little bit earlier than that, to be fair, but walking you through what's the plan. Well, the plan is we got our manipulation, we got our low risk buy, we got our first stage accumulation right in here. And even though this is the weekend gap premium, it's already done a lot of work in our discount. Think about it. We got the movement below the gap, weekend gap. We got our low risk buy and the inversion model, which I gave you for free on this YouTube channel as part of the free beginner series. Right. Trading in the direction of liquidity. Okay. So price has no reason to trade back down here. So even though this is a premium, again, based on the Sunday gap, okay, we'll just scrunch some of these things over, okay? It is in a premium, but remember, if you zoom out, all right, we're going to take everything off now. I am going to come back to that though, but I want to draw this real quick. That was the target I gave you yesterday. This was the low that was set. So what I'm going to do now is we're going to remember this price, 58.59 and a quarter. Okay. $58.59 and a quarter, aka fair value level. Okay. Now this is the part where your jaw might hit the floor. It might not. It might. I don't know. But what did I tell you about 50%? What did I tell you about them? 50%. If the market is set to go higher, 50% will be a discount. But anything below 50% would be a discount too. Where is this reaccumulation? It's below 50%, which means this isn't a discount. Relative, remember again, to up here. Right there. So even though, again, I'll say this again. Even though it's in the weekend gap premium, overall, that's still a discount. You see that? Then we get our run. We come back into it. This down movement here is actually what got me out because I had put my stop a couple points in profit. So this got me out. I'm like, okay, well, you know, whatever. And then eventually we ran. So that's cool. It's always nice getting knocked out before the next move, but partialing on the way up, and that's fine with me. So wasn't the greatest day, but hey, it's about following the plan. Okay. What's the plan? I want to look for longs either in a discount on the smaller range, like the say the weekend gap. This inverted imbalance, that would have been a lot better. Entry would have been way better. Okay. But if I can't get that, either because I'm late or I just didn't do it, you know, whatever the case may be, I'm not afraid to get in here because that's still in a discount. Okay. So normally the plan is to get near the low. But if I can't get that, or if I missed it, I'll still get in because we're still going to run to the highs. We're still going to go there. Does that make sense? So I don't want to make this recording too long, or this YouTube video too long. But I guess if we had to sum it up in one sentence, like I said earlier, the strategy is I want to get in sync with price that is running to opposing liquidity. That's why I give you these levels. Just like Bitcoin, right? What did Bitcoin do today? I gave you this today in the Discord. Is probably one of the only times you'll ever hear me talk about Bitcoin. And that's why I'm kind of like a little bit arrogant on social media. That's why I say, how does he do it? Because I never talk about Bitcoin. I never do. Yeah, Jordan, you're welcome. I know you were itching for that. John never talks about Bitcoin. Every time somebody asks him about crypto, he always says, ask somebody else. Right. Ask somebody else. I'm not the crypto guy. I'm just not. But what I am is somebody who follows the plan and follows the rules. So, Bitcoin 72,000 today with the eyes. That's me saying, hey, if we're at 71,300 and 72,000 is higher, that means it's going up. Or at least I think it's going up. Bullish. So what's right there? We'll take a look. Take a look. What was once bearish was no longer bearish, becomes bullish. What's that right there? if you include this gap right there in the blue circle, if you look at that gap, and you also include like this together as a imbalance, if you will, we have a gap here too. We traded through that. Did we get to 72,000 up here? No. So what did we come back for? This gap, which is inside of that inversion. That's the inversion model right there. What time was that? Well, I told you in the Discord at 8:38. This wasn't until 9:25 or 9:20. That's like a 40-minute heads up. Okay, right there, boom. Down candle, traded through, comes back right there, boom. Rallies, retracement, we rally. Are we at 72K yet? No. Then we poke above that. Then small retracement for the continuation. So that's not bad, huh? The only time I mentioned Bitcoin to you, well, I did earlier this year. I said something on the daily. We'll get to that in a second, but it's liquidity. It's liquidity. It's always been liquidity, bro. It's always been there. I gave you 72,000 on August 11th, bro. I gave that to you on August 11th for public, free, public, on Twitter. Now, mind you, we got a little bit, and then like, I don't know what happened in September. September, it just really traded, lower. And it's like, okay, well, did we ever take that low? No. Did we get drawdown? Oh, of course. I'm not perfect, but I'm going to share my loss. Well, this isn't a loss, but I'm going to share my imperfections with you. Not every single one, but if I only show wins, there's a lot of people out there that are like, oh, if you only show wins, you're a fraud. It's like, but it's like, okay, I'm wrong on the timing aspect, but we never made a new low. So once we started, we started getting legs towards those highs. It's like, okay, now we can, look for retracements and so on and so forth. So today being October 29th, look at yesterday and the last couple of days. Price is extending higher, right? So what should it trade to? These equal highs and above it. So watch this. That's 71,958. Now I gave you 72K because that's an even number, right? But what makes this so easy, right? How does he do it? Order flow, dude. Higher time. I really got to edit this video. Higher time frame liquidity. Okay. What's the market going to do first? Just like ES, just like any other asset, gold, silver, indices, Bitcoin is no different. What's it going to do first? There's some lows down here. There's a low here. Okay. So what happens? We drop down. Look at that wick. 5-minute time frame, Bitcoin. At equities open, nonetheless. What happens? We sweep that. Then we trade higher. Now, the equal highs were met there, but that's not the liquidity above it. So this is not going to reverse here. There's your inversion right there at 920. Okay, 920. Again, compare and contrast when I told you Bitcoin 72,000 question mark. Okay, that was actually in here. It was right inside here. There's your inversion, discount, and this is also kind of a fat mitigation too. There's your mitigation model. Gap inside of a mitigation, right? Low, high, lower low that sweeps liquidity, aiming for opposing liquidity. That's how I can do this, okay? It's not a secret, chat. Literally, it's not a secret. I've been telling you this. I keep telling it to you, and I probably will not stop because I haven't stopped in years. And I hate to sound egotistical sometimes, but be honest. Give me a week in the last 2 years. I haven't told you where it's going to go beforehand. Because I'm waiting for something that is so high probability that it should be impossible or near impossible for me to be wrong. That's it. So once we manipulate, what would that be? Buying below old lows. We don't really get a retracement right after that. So I'm not going to tell you like, oh, there was a low risk buy opportunity in here. You could say there was a next candle entry in here. I'm not going to do something like that, but I will do something like this. Or I might buy that gap right there, like inside this gap. I might do that because that's still an inversion here. Okay. So that's what that looks like. Hope is not a strategy. I'm not hoping the market's going to do this or do that. I'm going to say, what's the plan? Where's the liquidity? Let's get in sync with that. That's the plan. That's how you pass a funded challenge or a combine. That's how I pass my combine.